You learn more, you earn more. It is time for another episode of Ask Pat, where Downing-Frye Realty's Director of Corporate Training helps you become more productive, professional, and profitable in your real estate career. Please welcome Pat Pitocchi and Cindy Woolley.
Good morning,
Hi.
Pat.
Good morning, Cindy. It is wonderful. With the coming of spring, we are resurrecting the restream videos, which is wonderful. I think it's very helpful for folks to listen to people just chat about the market.
Absolutely. And we've got such a wonderful expert and great personality and just always enlightening and inspiring person with us today. Brett Carter, Senior Vice President with FDM Home Mortgage. Thank you so much for joining us.
Good morning, Cindy. Good morning, Pat. And you're right. Spring is here. It's March Madness. The real estate market's going crazy. It's awesome.
Right. And Brett is up bright and early and raring to go. So,
Absolutely.
If we have a few questions for you, sir.
Sure.
If we could start with those, and who knows where we'll end up at this moment. But if you could talk just a little bit about what a wonderful time this is to be a realtor. Let's start with that, and then we'll move on to what Fidelity can do for us.
Absolutely, Pat and Cindy. So I get that question asked all the time. Is it really a great time to be a realtor? 2020, 21 were crazy. Some of the best years. You know, Pat and I have been doing this for a very long time, probably 30 plus years. We both started when we were 12, obviously. So,
Absolutely.
Right. So we've seen a market come off a superheated market in 2020, 21, where production was falling from the sky. Reality is 2022, the market started to shift a little bit. 23, that shift continued, but it's still a great time to be a realtor. And I'm often asked why. Well, think about what happened in 2020 and 21, right? The market was really hot, but think about all of the people that were pushed out of the market, right? There's still thousands of potential buyers that want to come back into the marketplace, and they're just looking for professional guidance to do that. When you look at the DF team and the FDM team, we provide that professional guidance. So all of those people that were pushed out of the market for whatever reason, maybe they didn't have the cash to close, maybe they had challenged credit, maybe they couldn't compete with cash buyers, right? That some of that competition now has waned a little bit. So it's opening up an opportunity for these people to push back into the marketplace. Now, who's better to help them in the marketplace than a true real estate professional? So we just have to keep that in mind. There's plenty of prospects, right? 2020, 21, I always say they were in the box. Now we just have to look outside the box. And when we work together with DF and FDM, we have unique products that can pull these people back into the marketplace. And you know what? They're ready to buy. They just need guidance to do that. And that's where your professional realtor comes in play. So I'm a contrarian. I think when markets have slight dislocations, when everybody else is playing defense, it's a great time to play offense. So for the real estate professional that, you know, maintains their sales energy, maintains their professionalism, and is able to pull these people back into the marketplace and give them the opportunity that they missed over the last 2 years, there's never been a better time to be in a realtor than there is today.
I agree with you, and Downing-Frye is very fortunate. We've made arrangements with FDM, who has joined us in the past couple of years, and we have not only survived but thrived in
Absolutely.
every market. We were just named one of the top 500 companies in the country. So we're very happy about that. I have to just take a moment to to applaud everyone. But we do believe that together, DF and FDM together cannot be beat. And this is, if you know your market and know the changes, you can not only survive but really thrive. And we believe we have the tools to help you do that, joining with FDM.
You know, one of the, I think, the exercises that agents should do today is, and when I do all the real estate training, I talk to people, go back to people that you weren't able to sell a house to in 2021. Don't judge, right? Just reach back out to them. It could be credit. It could be cash to close. It could be they missed out on against cash buyers. Reach back out to those people and pull them back into the marketplace and reframe and let them know that, hey, all of the factors that caused you to miss the opportunity the last 2 years, they're gone today, right? We may be able to help you find inventory. Affordability is still there for you. There's less competition in the marketplace. So where you were losing before, you can come in today and have the opportunity to buy. Well, what about higher interest rates? Well, Well, interest rates are a tool. We're going to focus on affordability in just a second. And by the way, when interest rates come down, and we believe they will, you'll be able to refinance. And it's a great time to buy, because as rates come down, property values will start going up again. So you win both ways, right? You can take advantage of a flattening value today, buy where it's a little more affordable. Interest rates come down, you refinance and get a lower payment, and your property values go up. What a win, right? We just need to articulate that from a real estate agent standpoint to our client base.
Absolutely. And, Brett mentioned affordability, which is one of our chronic problems in this particular area, because we have so much non-affordable housing, I guess we'd have to say. So how can you advise us and maybe help our folks and customers with this whole notion of affordable housing, Brett?
Well, I think it's two things. Housing affordability obviously has been a buzzword nationally in certain markets like Florida, or where our corporate headquarters are in the DC market. Affordable housing is a challenge. But when we think about it, two things that agents really need to understand economically. First off, rent inflation is growing much faster than mortgage payment inflation. Even though interest rates have gone up, rent inflation is actually moving faster. So as I tell renter clients, well, if you're very comfortable with your payment today, understand it's going to go higher next year, right? The only way to protect yourself against that is actually by getting a mortgage, buying a property, because then you know your payment is going to be relatively set. Obviously your taxes and insurance may change, but if you want to protect your payment and give that payment stability, home ownership is the best way to do that. The other thing we need to talk about is there's an affordability misconception that the gap between a rental payment and a mortgage payment is not as great as people think. So, for example, maybe I'm making a $3,000 a month rent payment. Yes, people are paying $3,000 a month in rent in some marketplace, but maybe the mortgage for the property I'm looking to buy is $3,500. Well, I really can't afford $500 extra. Well, is it really $500 a month extra? Probably not, because two things happen in the affordability side. When I'm making a mortgage payment, right, that's principal and interest. Now, principal, actually, I'm paying down the principal, which becomes a savings plan, right? I'm not giving all the money to the bank. Every time I make a mortgage payment, part of that mortgage payment is like putting money in a bank and building equity, Pat. So, for example, if it's a $3,500 payment and $500 of that payment is a principal reduction, what am I doing? I'm putting money in my own bank every month. So I'm not really paying more than renting. I'm paying what I paid in rent and putting $500 in the bank, so to speak, each and every month. I ask my clients sometimes, well, you're paying down your principal of $500 a month. That's $6,000 that goes into a, quote, forced savings plan for you. Are you able to save that money on your own as a renter? The answer in most cases is no. So wait a minute, we're going to put you in a property, right? You're going to be a homeowner. You're going to save money each month. And what else happens, Pat? They build equity. One of the things, and we work with financial advisors, the single greatest form of passing generational wealth is through real estate. The majority of people, when they leave part of their estate to their heirs, the majority of that estate is what? Their home. It's not cryptocurrency. It's not gold. It's not stock. It's their home. The key to building generational wealth is owning real estate. The other adage of real estate is the longer you wait, the more money you lose, right? If I buy early, I gain from appreciation and equity. I'm paying down my mortgage, and I'm going to have a better valued asset to pass to my heirs. So that is the key. Any financial planner you talk to, the key to building wealth is your real estate. You have to pay to live somewhere. Every time I make a rent payment, who gets wealthy?
The owner.
The landlord. Every time I make a mortgage payment, who gets wealthy? Me, right? So we want to take the money out of our landlord's pocket and put it in our client's pocket. And, not your 401k, not the stock market, because there's an imputed value you have to pay to live somewhere. So affordability, as agents, we just have to help our clients understand it better, right? The gap could be simply I'm putting money into my home savings plan versus just giving it to my landlord. So when you do that, we're surprised to find in many cases they're paying exactly what they were paying rent or cheaper, because part of that money goes to them every month. So there is no better vehicle to build wealth in real estate today.
Absolutely. I'm convinced real estate and holding it is extremely, extremely important. Let's talk a little bit, if it's okay, Brett, in terms of going after that shiny, perfect property. Everything's lovely. I put the key in the door. I don't have to do anything.
Right. You're looking at the same shiny penny everybody's looking at, right? So everybody goes into it. I love this house. It's awesome. It's got all the things I love, and I've got 37 contracts I'm competing against. Okay. Well, one of the things we talk about is everybody chases a shiny penny, but there's, I think last time I counted, there's 7,212 flip shows on television, right? Pretty soon there's going to be Flip Naples, Flip Glen Burnie. They're all over the place, right? So, but investors, what do? They find a property that's in deferred maintenance or need just a little bit of work. They put the work in, they turn around and they sell it as a shiny penny. They take it as a little tarnished penny. They make it shiny. They sell it. They get the same 37 people trying to write a contract on it, and they make a lot of money. I'm going, wait a minute. Why can't our clients just flip themselves? What if we help them find a property? Because it's not going to have the same amount of competition, right? They walk into a property and they see, okay, maybe it needs carpet, maybe it needs paint, maybe the bathrooms need to be upgraded, maybe it's got the avocado appliances from 1972 and we need to replace those. Okay, what if we gave them a tool? So you know what? We're going to show you how you can buy that house and make it yours and keep that payment exactly where it would be as if you were to buy it when it was already a shiny penny. And you know what? You're going to get the benefit of it, and you flipped yourself. If I come in and we use a rehab product, whether it's the Fannie Mae rehab product or the FHA 203K, which are actually very easy to do, right? I have the money to buy the house. I have the money to make it just perfect, right? Make it what I want. I'm going to build equity just like an investor would be, but who gets to keep it all? Me, right? So that's a win. One of the things I think we should coach our agents should look at doing with their clients, when they show a property and they're walking around and they see them, they're making little frowny faces, just ask the question, well, Pat, what would you do to make this house perfect? Mm-hmm. And just be quiet, because they'll tell you, it needs new carpet, or we need to paint. We need to update the kitchen. Oh, you know what? We do have a program that will allow you to do that and keep your payment exactly where you want to. What would you think about that? Right. Just ask that question because it opens up doors for them and gives them a better thought process. And, we've won in that strategy because most people, right, aren't going to make multiple bids on those deferred maintenance properties or properties that need a little bit of work. So it helps solve some of the inventory issues that we're seeing.
So I'm always interested in how we can help our folks out in the field.
Yes.
And DF and FDM together combined can do that. We really should encourage our folks to put together the top 10 reasons to buy now. How to shine a penny if it's tarnished.
Absolutely, Pat. Shine that penny.
Shine that penny up.
Shine that penny.
Get it moving.
That's also where opportunities lie, right? We have to help our clients find those opportunities. So shine that penny. One of the things that I would encourage you to do is when you're working, when you get your borrower pre-approved, and this is obviously for the first-time home buyer side, but this also works in move-up buyers as well. Get them pre-approved for a standard mortgage, but then ask Kent or Linda, say, hey, let's pre-approve them for a rehab loan so they know going into it how much money they would have to work with. For example, the FHA Limited K, they get $30,000 to do cosmetic stuff. You can say, you know what, you can buy this house and we have $30,000 that you're pre-approved for that you can paint, kitchen, deck, bathroom, cabinets. Here, done, if you want to make that offer. That's a 5-minute exercise. Go out with 2 pre-approvals so your client knows that they have opportunities for them so they can envision it.
Absolutely. And I really do think that's a great idea. And, a lot of real estate is education. We're really kind of enforcing, we always use the little tagline, learn more to earn more. The more you know, the more you can explain to your customers and give them options. And one of the reasons that we feel so strongly that together as a team, we can really put forth options for people is that there are just so many options in this market. And we must have the onus of sharing them with our customers. So,
Pat, one of the first questions we had was, is it a great time to be a realtor? Absolutely. Yeah. And it's a great time for a realtor who elevates their professionalism and gives them options, right? You learn more to earn more has never been more important today because we have to help our clients. Because let's think about it, right? A lot of them are getting, barraged by a lot of negative news, right? Well, interest rates are going up. It might not be a great time to buy. That's all, honestly, that's all fluey. right? It's a great time to buy. I bought my first house when interest rates were 22%. And other people were buying when interest rates were 22%, right? And it was still a great investment. And, I still have the house. I bought it when I was in college. But, we've been through market dislocations. And every time I tell people it's a great time to buy, right? 2008, 2010, great time to buy. 1979, great time to buy, right? So, because I can't believe I was actually doing this in 1979, but it was a great time to buy. 2023, it's going to be a great time to buy. But as real estate professionals, we have to be able to provide that educational component so our buyers understand what they're dealing with the market and where the opportunities lie. What I believe today, and we talked about it, as interest rates are a little elevated, that has compressed values. Not in every market, some are superheated, but across, we're even seeing it statistically, we're seeing values normalize, right? I don't ever say it's a correction. The market's normalized. But what will happen as interest rates come down, and we expect they will, property values will start to go up again. So when do I want to buy? I want to buy before they start to go up again. But we need to help our clients do that, because they're not going to buy with confidence because they're hearing negativity from the news. We have to give them, right, the proper real estate guidance. And for true real estate professionals, who better to do that than us? That's why it's a great time to be, right? Our skill set has never been more in demand. The reality is, and I'm not picking on anybody, in 2020, volume was falling from the sky. You didn't have to be a great realtor. So some of the weaker competitors we had were in the marketplace taking our business. They're gone now. So the true real estate professionals that can convey that message effectively, you're going to win.
Absolutely.
Now,
I'm convinced, Cindy. Are you convinced? If you are, we have some options for both of you right here in Naples.
Yes. No. If I could convince my wife to move to Florida, I would have moved to Florida a long time ago.
I know. Well, I'm sorry, sir. Can't help you with that.
No. So right now I'm anchored here because she is. So
absolutely. But he has his foot in Florida. Don't you worry about that.
Yeah.
But Cindy, I think it's a great time for all of us. As I always say, when people ask me when is the best time to buy, I say now.
Today.
I often talk about penny candy. I used to talk about that with my grandchildren. They know what I'm talking about because they have never experienced that. So, no, really, we thought we were lovely if we got a nickel.
Yes. We had a nickel. You could buy 5 pieces of candy. It was awesome.
They have never heard of that. So we have to understand that people really have to understand that value changes. And there's never do we find an ideal, but except we can say that now is always the best time.
One of the things really quickly about affordability, and I can send this out to everybody. If I was to ask a real estate agent a question today, I said, is housing more affordable today than it was in 1985?
Yeah.
Most people go, no, it's much more expensive today, right? It's actually real estate. The affordability of real estate is based on its percentage to income. So when we look at real estate value today, right, as a multiple of income, it's actually more affordable in 2023 than it was in 1985, right? And that's an amazing statistic that we just have to help our clients understand that. So yes, sales prices have gone up dramatically, but what else has gone up? The average income in 1985 was $23,000 a year, right? The average sales price was just short of $100,000, right? So wait a minute. Okay. So you look at that as a percentage, right? The income is a percentage to the house price versus today, where the average income, right, is close to 100,000. The average sales price is just a little over 3. It's actually more affordable today relative to your income to average purchase price than it was in 1985. Most people don't think about that because they only look at the price, right? It's always a ratio of income to sales price. And today it's more affordable than it was in 1985.
So interesting. Well, Brett, you've got Kent that's going to share some more advice at our boot camp coming up on April 19th. Pat, you want to give a little information about the boot camp?
Absolutely. Bootcamp is, this is our second bootcamp at Downing-Frye. And folks really liked that scheduling and that format so that people can get in. And I do believe the secret to this market is to know more. And we hope at the end of the day, people will leave with their heads. They usually leave with their heads hurting a little bit because we've just bothered everyone and gotten them out. But I think one of the real assets of Bootcamp is to get the information out to people in where everything from bias to mortgaging to using app files, functioning as a realtor. But we do believe that this is something that our folks like, and we're going to have hourly presentations, hour and a half presentations, I should say, and we're going to cover many items, and hopefully they can grab that information quickly and use it. That's the key. Knowing things is wonderful, but sharing them and using that information is the key to earning more.
Absolutely.
So the more to the tagline, right? Learn more, earn more, know more, do more. You have to do more, right?
Yeah, you got to close the circle. But Brett, agents don't have to wait for boot camp if they've got a pressing need. Kent is always around, and you've got a group of a team that's ready to respond any time of the day and help our agents.
Absolutely. We're 24 hours a day, 7 days a week. We're ready. Linda and Kent and Kim are available. Obviously, if you want to email me with any questions, feel free to do that as well. I don't help you transactionally, but if we want to talk about sales ideas and those types of things, I'm always open. So.
That's awesome. We'll put links down in the comments section to make sure everyone can reach out to FDM and find more information on the boot camp. So with that, I think we've got a wrap.
Absolutely. Thank you, sir. I appreciate it, Brett. I know you had to get up early to get this done, but we really do appreciate it.
It was a lot of fun as always. You're wonderful. The DF team is fantastic. It's a great time to be a realtor. Let's just get that message out to our clients. Homeownership is affordable. There's never been a better time to buy than right now, and there's never been a better time to be a realtor than right now.
Absolutely.
Can't say it any better. Goodbye.
Thank you for joining us for this episode of Ask Pat. You can learn more at Downing-Frye.com and make sure to follow us on Facebook and LinkedIn.